Hi, I'm Coco.
And I'm Rory. Whenever you purchase something meaningful, it's common to do some research in order to help you with your decision. In this video, we'll talk about two types of research or analysis that investors use to make decisions about financial investments: fundamental analysis and technical analysis.
Fundamental analysis involves using various pieces of information to determine what you believe a company is worth. This information could be related to the company's financials, the management team, or the industry that it competes in. In many cases, it can be a combination of those and more.
Think about if you were to buy a car. What are some of the things you might want to consider? How many miles has the car been driven? Who made the car in the first place? And is that a strong brand?
Really, all you're trying to determine in this process is what you think you should pay for the car, or in other words, what you think it's worth.
Once you determine what you're willing to pay for it, it's time to compare that to what the dealership or seller has actually listed the car for. If the price they're offering is much lower than what you think it's worth, that is at a discount, maybe you'll purchase the car. If the price is higher than your estimate, you may take a pass and look for a better deal.
This process of determining a value and comparing that to a price is similar in investing. However, instead of car, you're going through a similar process for companies and comparing that to their share prices.
There are many different methods or equations that can help investors assess how a company is performing or what it's potentially worth in relation to what people are actually willing to pay for it.
You've probably driven by a gas station and seen a big sign that shows you the price it costs to fill up, which is a dollar value per liter of gas. Well, guess what? That's a valuation matrix. You may not have noticed, but those numbers do change, and therefore, the price you pay is not always the same.
Earnings per share, or EPS, is a valuation metric that's commonly used in investing to evaluate a company or to compare different companies. Earnings per share is calculated by comparing the amount that the company is earning to the amount of shares that investors actually own. Ideally, this EPS goes up over time because earning more per unit is a good thing, but it's just one of the many equations that investors can use to assess a company's value.
Technical analysis is another common form of security analysis. When you hear the word technical, I want you to think of the use of graphs and charts. Investors use information to try to identify trends and/or signals that might help them to predict where the price of something will go in the future.
Let's go back to our car example. If you were to determine the value of the car based on technical analysis, you might not be as concerned with the same details as the person who utilizes fundamental analysis. You might ask questions like, what did the last person who owned this car pay for it? Why did the price I'm getting go up or down? Or is the car better in certain seasons, like a convertible in the summer or a truck in the winter? And did that actually affect the price?
The idea is that technical analysis focuses on trying to identify trends in prices and whether those trends will continue or change moving forward.
Many investors use a combination of fundamental and technical analysis to make decisions on whether they want to actually own or not own a certain stock. Fundamental analysis can help with determining the quality of a business over the medium to longer term, while technical analysis can help determine at what point you might choose to purchase or serve as a reality check on the price you've determined through the fundamental process.
Let's pull it all together. You do your homework to purchase a car. It has a brand new stereo and is made by a great company. And they even threw in a new set of winter tires. But the price they're offering you seems quite high. You take a look at what prices other similar cars have sold at recently, as well as what they've charged for your model in the past. It seems way too expensive. And as a result, you may wait for a sell or a better price. Well, guess what? You just use a combination of fundamental and technical analysis to reach your decision.
Securities analysis can seem complicated and overwhelming at times, but the process that investors use to determine whether they want to own a stock or another asset is not all that different from what someone considers when they're purchasing a car, a new phone, or going on a vacation.
Hopefully, this video has been another helpful step in your education on investments.
Remember, understanding that all investments come with risk and assessing both your willingness and capacity to take those risks is key to your investment journey.
Thanks for joining us today. Make sure to continue following along with our videos to learn more about investing. Have a great day.